Hey, how's it going, guys? Thank you for joining me on this week's episode of The Real Deal. This week we're talking about a very hot topic right now for first time home buyers, and it has to do with the new year. I've been getting a huge influx of potential buyers and just inquiries about what does it take to buy a house. Now, I've done this video before, but it's been some time, and of course, I get new followers from time to time, so I thought it was a good time to do a refresher. And sometimes some of this information you can find online, but to hear it directly from the source, to hear it with somebody that deals with this every day, it's good to have the source telling you what the minimum credit score requirements are to purchase your house. I'm going to talk about three different types of loans. I'm going to talk about FHA financing, VA financing, and conventional. Not in that order, but that's what I'm going to talk about. The most lenient ones traditionally are going to be the government-backed programs, which are FHA and VA financing. And for of you guys that are, retired military or are serving military, VA is for you. Anybody else, it's FHA and conventional. So let's go ahead and start off first with the easiest one to acquire, which is FHA financing. And I'll talk about some of the upsides and downsides of FHA financing. So FHA requires your credit score, if you're paying with your own down payment, to be a 580 roughly. And I say roughly because there are some lenders that advertise a 550, FHA financing. But the problem is usually the rate's going to be really high and you're going to have to put more than the minimum 3.5% down. So right now I'm just going to talk about what I know for a fact, without a doubt, that with the 580 credit score, you will qualify for financing with an FHA loan. Your minimum down payment is 3.5% down. For down payment assistance, let's say you want to have your down payment covered and you want to take a slightly higher interest rate to get your down payment covered, you want to be hovering around a 640 credit score. Now, the cool thing with FHA financing, it's pretty black and white when it comes to your credit score requirements. If you have the credit score requirement, then you should get your approval. That applies to both your own down payment financing and down payment assistance. There's ways to manually underwrite to get your approval. So those are some of the benefits. And then also interest rates for FHA financing are usually going to be about 0.5% lower than conventional financing. So it's a really good option for first-time home buyers if they're working on their credit, or if you're wanting to get a really low interest rate and you don't have enough to put a big down payment to get rid of your PMI. So it's a good option. Some of the downsides are usually if you're buying an investment home, you can't make an offer on an investment home that just got sold within the last 90 days. That is one of the downsides of FHA financing. But other than that, for the most part, it's the same as conventional. Nowadays, conventional financing doesn't require 20% down, so there's more and more people using conventional financing, which brings me up to my next one, conventional financing. So this, once again, these score requirements are as of right now what I've used that has worked. However, with conventional financing, it's a little bit different than with FHA financing. So you can have the credit score requirements that you need, but there's a lot more that goes into it, and this is why it's a more difficult loan to get. Conventional financing is a little bit more strict on the amount of debt that you have, your debt to income ratios, on the amount of collections that you may have. So you might have everything that you need to qualify for conventional financing, but you might not get the approval. And if that happened, that's when we had to go FHA. Now, this video is just talking about the credit score requirements. There's so much more that goes into each individual type of financing, which is really important if you guys are thinking about buying a house. We schedule a time to meet so that we can go over everything in detail. But this just kind of gives you guys a benchmark. So conventional financing, if you're using your own down payment, 620 credit score, you might ask, well, why would I use conventional over FHA? Conventional, you can prepay your mortgage insurance. So if you saved up some money and you don't want to put 20% down or 10% or even 5%, you can put 3% down with conventional financing and prepay your PMI so that your monthly payment is lower. Ideally, though, with conventional financing, the highest you can get your score, the better, because that'll make your payout amount for the PMI lower. But this gives you the minimum requirements, and for down payment assistance, it's the same as FHA financing. It's 640. Once again, though, this has to go through an automated system that lenders call DU, and that would give you your approval on conventional. As FHA, on the other hand, that one's a little bit more flexible. Another upside to be able to use conventional financing, aside from being able to prepay your mortgage insurance, is that you don't have to exclude investment homes from your search. There is a lot of investors out there that buy houses and they flip them. Open Door is a huge one. They buy a bunch of real estate, and if you have an FHA loan, unfortunately, you can't make an offer on a FHA on a flipped home or an Open Door home or offer pad home, those type of homes, unless they've been on the market for 2+ months. But that doesn't usually happen. Usually, houses sell within the first month being on the market. So there is definitely some benefits to being able to qualify for conventional financing. But there is some downsides. One of the other downsides, of course, is interest rates are going to be higher with conventional financing. So for the most part, if you don't have more than your minimum down payment to buy, I would not recommend going with conventional. I would recommend going with FHA because it's going to be more flexible and you're going to be able to get a better interest rate. If you have some extra cash and you want to prepay your PMI, I've seen some prepays being $3,000, some of them being $5,000, and you can completely eliminate your private mortgage insurance, which is huge savings over the life of your loan. So gone are the days when you had to put 20% down to get rid of PMI. That's something that is no longer the case. You can actually get rid of PMI with conventional financing by just putting a little extra towards your down payment when you're in the middle of closing. And we have VA. Now, VA financing, for the most part, similar to FHA. It's minimum score requirement that I've been able to help clients with is 580. Some lenders can go lower, but the interest rates are going to be pretty high. So ideally 580, 600, 620 is where you want to be. I have heard of some lenders that can go lower, my lenders included, but it's on a case-by-case basis. Some of the benefits of VA financing over FHA and conventional, if you're somebody that's in the armed forces, of course, and you qualify for this type of financing, is that you don't have to put a down payment and you don't pay private mortgage insurance, which is big savings. Also, they're usually more flexible with the amount that you can borrow. Usually you can go much higher than the typical 50 or 57% that conventional and FHA financing restrict you to. So as a whole, definitely our government does a great job taking care of VA in financing terms. Obviously, there's other stuff, but as far as financing for a home, VA is definitely the best program out there. So if you guys are armed military or, in our armed forces, then you guys have that advantage if it's available to you. But guys, just take these numbers with a grain of salt. Like I said, a lot of these are kind of on a case-by-case basis, but for the most part, these are pretty solid numbers. If you guys use Credit Karma, if you guys use Experian, if you guys have Wells Fargo, Capital One, they all have their own built-in credit simulators. And if you're hovering around that 580, 600 mark and you have your own down payment, you're a really good candidate to purchase a house. If you're hovering in that 580, 600 mark and you need down payment assistance, you're still a good candidate because you can submit an application and get credit recommendations to get you up to a 640 to be able to qualify for down payment assistance. So if you think you're a good candidate, if you feel like these credit score requirements are within the range, within that possibility of getting you in the home in the next couple months, reach out to me, shoot me a message, give me a call so we can get together and set up a game plan so that way we can help you guys purchase a house this year. Prices are still going up. I will not lie. Prices keep rising. Interest rates, however, are still historically low. I've seen some crazy low interest rates out there for premium credit. So definitely give me a call, guys. Shoot me a message. Let's get together and get you into a home this year. All right. Thank you for joining me on this week's episode of The Real Deal. You guys have a great one. Take care.